And welcome back in, folks. Of course, this is the Financial Safari. It's your weekly show looking inside that complex financial world. And to make it a little simpler, it's time again, as we do each and every show, to check in with our local trusted advisor. And here in Birmingham, we check in with Chartered Retirement Planning Counselor Tad Hill. Folks, you can reach Tad at any time by dialing toll-free 800-929-4077. Walter?
Well, thank you very much, Coach Pete. And Tad, how are things going?
Things are wonderful. Glad to be back on the show. This is my favorite time of the week.
Well, always glad to be joined by you here on the Financial Safari. Tad, thank you so much for being here, and also a big welcome to all of our listeners as well. Tad, what are your thoughts on the current economic environment that we're in right now, and what should people be thinking about as we move forward toward the end of the year?
Well, it's a very good question. You know, the election's coming up. That's on people's minds. We continue to hear rumblings out of Europe about, you know, what they are or are not doing to solve their debt problem. And not only that, but just a few weeks ago, we announced QE3, so quantitative easing 3. And what happens, I see a lot of times that because of these things, people aren't sure what to do. Particularly if you're retired or nearing retirement, you realize that you need to have a plan. There has to be a plan of action. But because things seem so unsure, there's so much uncertainty out there, it prohibits you from feeling like you can make good decisions. And so what I counsel people to think about is, are we asking the right questions? Because we can, if we're trying to solve a problem and we get answers to questions, but we're not asking the most important question, Walter, is that going to impact the quality of the solution that we come to?
Of course.
The key to problem solving or planning, and really creating a plan, in my opinion, is just looking at a situation and solving for it. You can call it problem solving, you can call it planning, you can call it anything you want to call it, but the bottom line is we're trying to accomplish something, and when we are trying to accomplish something, we need to ask good questions. So what I would tell you to think about isn't what's going to happen in the election. What's going to happen with the European debt crisis, and is that going to throw markets into a tailspin around the world? What's going to happen with all of this money that the government's pouring into the economy? We can't worry about things that we can't control. We have to worry about things that we can control. So we know that QE3 is happening. We know that Europe has got these debt issues. So what are the things that we can do to control our circumstances? Some of them are things like QE3 and QE2 and QE1. These things are going to cause inflation. And in fact, Walter, you've been to the gas station or the grocery store in the last week or two?
Oh, yeah, too often.
What are prices looking like?
Going up and up.
You know, the government can use whatever statistics they want to use to tell us that we're not in an inflationary environment. And Bernanke can talk about how he's not worried about QE3 causing inflation because, you know, there aren't any inflationary pressures. I'm sorry, I go to the grocery store every week. I stop at the gas pump. Inflation is here. So, but if we're in retirement, one of the things that we need most from our investments is income. So this really kind of puts us between a couple of difficult things. We've got inflation on the one hand, so we need maximum growth from our money to outpace inflation. But on the other hand, we need income from our money. Being retired is a much more challenging financial proposition than being 35 or 40 and you've got a paycheck coming in. You know, retirement is wonderful if we can have peace of mind. And that's what our process does. Our retirement roadmap process helps people have peace of mind. But it's not by worrying about things we can't control. It's about being smart about the things we can control. So we know inflation is here. We know that interest rates are at historical lows. one of the things that people have done traditionally to generate income in their portfolio is put their money in interest-bearing investments, things that will give us yield. Think of yield like this. I can buy a piece of land at the beach, and if I don't have a structure on it, the only way I'm going to make money on that land is if it goes up in value, right? I buy beachfront property. It's a parcel of sand, and the only way I'm going to make money on it is if it goes up in value. But if I hold it for a 20-year period, chances are it's going to do pretty well. But is that going to generate any income for me in the meantime?
No, not over the course of that 20 years.
No. But if I built a house on it and I rented the house out, do I still own the land?
Yes.
Can the land go up in value?
It can.
But in the meantime, I'm also generating income in the form of rent, right?
Of course.
So think of investments the same way. Growth investments are like buying the land, and we want to get maximum increase in price over time. Yield investments are like building a house on the land, and now we're getting rent. But if we're going to invest for yield, what is the place that people have typically put their money in to do that?
Typically, that'd be bonds.
Right. People have put their money in bonds, but where are interest rates today?
Interest rates are basically zero.
They're at all-time lows. So if we're putting our money in bond investments today, we're not getting the yield that we've enjoyed in the past. Now, here's the other thing that I want you to be very aware of. There is a freight train headed down the tracks, and it's in these investments that we have traditionally used to generate yield and to protect our money, because the perception of bonds is that they are safer or more secure than stocks. But people have forgotten what a bear market in bonds looks like because we haven't had one in over 30 years. Because what drives bond prices?
Interest rates.
Interest rates drive bond prices. So it's the inverse. When interest rates fall, bond prices go up. So what's been happening to interest rates over the last 30 years?
They've been falling and falling and falling.
So bond prices have been doing what?
Going up in the meantime.
Right. Now, interest rates can't go much lower than they are. We've just discussed that we've got inflation because of QE 1, 2, and 3. And how does the Fed fight inflation? What is the Fed's number one tool for fighting inflation?
Raise interest rates.
What happens to bond prices when you raise interest rates?
They're going to start to plummet.
Now, you asked me what kind of effect the economy's having on things and what can we look at. And I said, look, we can't worry about who's in the White House. We can't control Europe. We can't control what the Fed does. But we can be aware of these things so that we can have a strategy for what happens to our more secure investments if we get into a rising interest rate environment. So one of the main things that I am helping people with right now is to create a strategy so that we can generate yield from the investments without being overexposed to interest rate risk. And one of the things that I want you to ask yourself is, do you know how much exposure you have to the bond bubble? You can't turn on the television or read a financial magazine without people warning you about the bond bubble. Watch out for the bond bubble. Well, that's great, but what do I do? If I need income from my investments, and you're telling me to watch out for the bond bubble, but if I invest for growth, I'm not generating any income, people feel like they're stuck between a rock and a hard place. And the truth is you're not. There are solutions. You've just got to ask the right questions. You've got to get the right answers, and then you have to create a strategy. If you're listening today and you would like to know for your specific circumstances what the answers to these questions are, do you have exposure to the bond bubble? How do we get yield without taking too much risk? Be one of the first 5 callers, and I'll set aside time on my calendar so that you can receive completely free our retirement roadmap review. We do require that you have $500,000 in investable assets. It is important that you have that minimum, but if so, this review will take place in our office on the corner of Valleydale and Caldwell Mill Road in Indian Springs, and the purpose of this is so that you can fully understand what's going on in your financial life and how it's structured. Our process is designed to ask these questions and to ask questions that no one has ever asked you before, to uncover critical information that has probably been missing from your decision-making process in the past. Make sure you've got the answers to these things before we start talking about what strategies to implement. In other words, to uncover all the must-know facts, understand where things are currently. Do you have more risk than you realize? Are you exposed to the bond bubble? How do we generate yield for you? How much do we need to generate? These are the kind of questions that a good retirement planning process asks before we start making investment decisions. The good news is that after going through our retirement roadmap review, you will have a clear picture of whether any of these things are happening to you, and if so, what you can do to take control of your future, both for yourself and your family. Our goal is for our clients to be able to retire or live through their retirement and have peace of mind so that you can enjoy your retirement and know that you've done all the things necessary to protect not only yourself and your spouse, but to maximize your legacy for your children and grandchildren. So for the first 5 callers who call in today and have a minimum of $500,000 in investable assets, an opportunity to receive our retirement roadmap review absolutely free with no cost and no obligation.
Well, it's a great offer, Tad. And folks, the number to call to take advantage of this offer, if you're one of the first 5 callers, you'll get this retirement roadmap review. Again, complimentary and with no obligation. 800-929-4077 is the number to call. Again, that's 800-929-4077. Get that common sense approach to financial and retirement planning from Chartered Retirement Planning Counselor Tad Hill, located right there in Birmingham, Alabama. He is our local trusted advisor in Birmingham and the surrounding areas. Again, the number to call, 800-929-4077. That's 800-929-4077.